All right, everybody, happy Friday. Well, it is Friday, November 11th. And I just wanted to say happy Veterans Day to everybody before we start off the stream of those people who served our nation. So thank you for that. I appreciate it. Is good because at least that's what the connection says. Anyway, we're going to be talking about a couple things tonight. We're going to be talking about the midterm elections. We're going to be talking about the FTX scandal that has been going on. And we're also going to be talking about some key stock market levels as it relates to the S&P 500, the Dow Jones Industrial Average, and the NASDAQ. We're going to be talking about the bond market or the fixed income market that was closed today. Okay, so the stock market was open. However, the bond market was closed in observance of Veterans Day. So thank you to all our veterans once again. We have some news coming out of Wall Street. So some news that we already knew, that financing is drying up on the streets. What does this mean? Well, we looked at some data specifically as it relates to M&A or mergers and acquisitions. 3% in recent months. Also, if we look at IPO activity, they also dropped decade. And we sort of talked about this, right? I mean, if you think back, going into Q3, the big issues that I brought out to the group, lower fee incomes due to lower investment banking fees, lower the past decade. We're going to talk about some of these corporations have racked up some potential amount through 2022 and 2023 in order to cover their interest expenses that are ever rising due to higher interest rates. So without further ado, let's get out of this room because I think we have internet issues, and we will start the stream. But first, let's say hello to everybody, but I think we'll wait to do that. There's a lot of people in the office tonight, so I didn't have a place to start the live stream. So let us sneak out of here, if you will. Now, I'll quickly take you guys, show you, look who we have as our new neighbor. I'll let you guys take a guess who this is. But this is our new neighbor. So they have all of the office floors down here and all. So they took over the entire side of this floor, which is cool. Ken Griffin and Mayor Francis Suarez conference or meeting the other day, which was very good. I'll say hello to everybody in the chat once we get downstairs, because usually the internet is not so good up here. We are on the 20th floor.
Floor, lobby.
Okay, we should be good now as we make our way down the escalator here at the 200 Southeast Financial Center. I'll just give you guys a quick view of the lobby. I don't think many of you probably haven't seen the office here. All right, now let's head outside. All right, let's say hello to everybody in the chat. Let's see who we have on this beautiful night in Miami, Florida. I see Connie Ruiz says, hey, Tom. Israelite King says, I made it. Good to see you. NJB says, howdy, partners. Good to see you, NJB. Thank you for joining. I see British Gray, the one and only British Gray from Tampa, Florida. Tone Rick is here. Good to see you, Tone. Happy Friday and happy Veterans Day. I see the one and only Vinny Castellanos says happy Veterans Day to all, including myself, who proudly served this country. Hey, Vinny Castellano, thank you, my friend. I appreciate you. Hopefully you spent your Veterans Day doing something you love. Adriana is here, says, hey, was just wondering about you. Hopefully you held up well for the hurricane. I did. I mean, thank God it missed us. The hurricane pretty much missed Miami, Florida. I can't say the same about Fort Lauderdale, but we were pretty good. I see Alexander says, hey, Tom and team. Dusty Cole, Sally, Patient Lobsters is long time no see. Always a pleasure. Teresa Diaz, Amar, Vonda Howard, the investigator is here. Welcome, everybody. Good to see you. Man, what a crazy, crazy week on Wall Street. Now, I want to start off the stream by saying tonight we are actually going to head down this way, and we are going to be walking past the FTX Arena. We haven't been over there in a while, and I think it's very fitting for the time we are in right now, because I think everybody knows what's going on with FTX. They have filed for bankruptcy, and this is probably worse than Enron. So we're not going to go too far into the intricacies of the horror show that is FTX tonight. We sort of explained all of the problems and what was going on with FTX specifically yesterday. But supposedly I was seeing a lot of talk on Twitter that FTX Arena has already removed the signage FTX on the front of the arena. So we're going to check it out, and maybe we'll take some guesses of who we think might take FTX's place as the sponsor of the arena. Linda Silva's here. Welcome. Good to see you. So we had a rip-roaring rally day again, another follow-through day on Wall Street. But I think it's important to talk about a few specifics here and a few key levels. So that's what we're going to be doing tonight. Now, if you notice the S&P 500 today, if you have tradingview.com or something like that, you could punch in ticker symbol SPX. Okay, we closed up about 36 points to 3,992. But if you notice, although we have broken above the 50-day moving average, whoa, check out this full moon here. Well, I don't think it's full. It's like maybe 75% of the way full. Yes, Soho Ecom World says Citadel Securities should take over FTX Arena. I would support that. I think that would be pretty cool. You never know. So what was it before FTX? American Airlines Arena, AAA Arena, something like that. So anyway, even though the S&P 500, I'll give you guys a quick shot of the Intercontinental Hotel. Even though the S&P 500 is above its 50-day moving average, I think we need to pay very, very close attention to exactly the levels that we are rallying into. Okay, so for some perspective here, I think it's very important to look all the way back to the summer stock market rally. So the summer stock market rally started on June 17th, and the low was about 36.40, I'd say. Let's cross this way and then head to FTX. So if you look where we bottomed temporarily, right, I would say the first real bear market rally, the first face-ripping bear market rally we've had, started June 17th. Now, it ended August 22nd, so I want you guys to pay close attention to the time frames here. And we rallied all the way back to 43.22. Now, notice, if you guys have TradingView up and you want to follow along right with me, notice the level where we were turned away, and then we made another low. And that was right at the 200-day moving average. Now, we're about a couple percentage points away from the 200-day yet again. And if we look at the time duration and also the percentage-based move of the S&P, they're very, very similar, almost eerily similar. So if we think about how big the rally was in the S&P over the summer, it was about 18%. So we had about an 18% big bear market rally, which is pretty standard actually. An 18% bear market rally is actually pretty standard. Right now, we're at about 14%. So just some levels there to stay cognizant of. Melissa White is here. Good to see you, Melissa. Welcome. I see the one and only FredX. Good to see you, FredX. Hope you're well. Gene Paul is here. Welcome, my friend. Good to see you. This is the county in Miami Heat announced that they are terminating their business relationship with FTX. Yeah, I saw that too. So that's exactly why tonight we are going to be walking to the FTX Arena, I don't even know what to call it now, and see if they took the sign down. I think it's going to be kind of cool to see. Herbert, thank you so much for the $5 donation tonight. This is Tom. I'm giving you up tonight for, nice, Mr. Murder Season 2, but we'll catch you on the replay. Hey, we'll enjoy it, man. Thank you so much, and hopefully you had a good Veterans Day today. Greg is here. Says hello, Tom. Welcome. Billy, this is Sam. Has 10% stake in Robinhood. I'd imagine he's going to have to block the sale that in the near future. Yeah, it's going to be a big mess. And so, Billy, you're right. And we talked about this yesterday, but I think it's important maybe just to quickly give my perspective on it again. And in general, and not to sound like a broken record, but in this environment specifically, now you guys all know my stance on cryptocurrencies in general, right? I'll quickly show you the Metro Mover snaking through downtown Miami tonight. And this is the building where we just came out of. So this is the 200 Southeast Financial Center. And I actually showed you guys Citadel Securities' temporary office, which is right in the WeWork office. Now, the problem with these altcoins, okay, or the alternative cryptocurrencies, altcoins means it's not Bitcoin, right? It's an altcoin. There's no regulatory clarity whatsoever from the SEC. And that sort of relies all on Gary Gensler, which is at the head of the SEC. So if we think about, I'm not sure if anybody in the chat has a big background in securities law, right? I don't personally, but from my general knowledge of the industry, in my view, if somebody had to come up to me and say, are these altcoins securities or are they property? Which one would you say? I would say these are totally unlicensed, unregistered securities. So the problem with all of these exchanges that have their own crypto token, if you will. Okay, so FTX was a major exchange. And I never used FTX, and I did have a Binance account, but I stopped using it because of this exact reason. I'm not comfortable with an exchange having their own token, so to speak, to fund their own operations, because you're essentially creating a security out of thin air and selling it on the open market to then in turn fund your operations. And I don't really want to get involved in that. Now, if the SEC came out and started to regulate this stuff and there were the appropriate filings, then fine. But as of right now, the cryptocurrency space is totally the Wild West, right? So essentially what happened with FTX is there was a classic bank run, right? A run in the bank. And it all started when Binance decided to dump, I think it was what, like 500, I'm not sure the exact amount, but billions of dollars or millions of dollars worth of this FTX token, right? And that really spooked the market. So everybody tried to withdraw all their money at the same time from FTX, causing a massive panic and a big price decline in the FTX token. So I think if you think about any type of cryptocurrency project, right, that has its own security or token, right? It's people creating these tokens, selling them to the public, and then using those proceeds to fund their operations. Because at the end of the day, these are all software projects, right? These are all mini software companies, but the way they go about raising capital, you can't just create a token and say, oh, it's a token, it's not a security, and then you can just skate around the law. So look, I think the SEC is to blame here. I actually wouldn't place all the blame on Sam, even though I've been pretty outspoken about this for years. I would place the majority of the blame on the regulators that are sort of letting this thing go to be the Wild West. But I don't know, any thoughts in the chat? What do you guys think? We're about to see the FTX Arena in a minute. This is Northeast 3rd Street. We are right outside Bayside Marketplace. Mets fan 1023 says, don't listen to Anthony Scaramucci. Yeah, so I actually watched Anthony Scaramucci today. I think he was on CNBC talking with Andrew Ross Sorkin. Did anybody see that interview with Anthony Scaramucci talking with Andrew Ross Sorkin about the FTX debacle? Now, I don't really have a problem with Anthony Scaramucci. I think he's a good guy, but at the end of the day, and for those of you who don't know who Anthony Scaramucci is, he is the founder, the CEO of Skybridge Capital. He makes a lot of investments in cryptocurrencies and the like. And I think, I'm not too sure what his exposure was to FTX, but yeah, I would not get involved. But did anybody see the interview? So check out the Paramount Tower tonight. It's all lit up in red, white, and blue, and I think it's going to say vote, because we are still in the midterm elections, believe it or not. Billy says 3 arrows: Luna, Voyager, Celsius, FTX. Who's going to be next? Yeah, so Billy, it's a good point. I think you make a good point because usually at the tail end of major bear markets or cycles, you start to see very, very big players start to implode and blow up, right? And if we could take away, I would say, one main characteristic of all of these major blowups, it all had to do with leverage. And I put out a tweet, I think it was yesterday or today, and I said it's very, very hard to go under and blow up if you don't have excessive leverage. And all the problem with cryptocurrency, right? I'm talking about all of these altcoins. I'll let the motorcycle pass. It's an extremely over-levered, high-levered industry, and it's not regulated, and that is sort of my biggest gripe with it. Dan Zhang, what's up? Says Peter Schiff must be really happy. I know him and Scaramucci don't like each other's investment ideas. Yeah, and I mean, so Dan Zhang makes a good point. So Peter Schiff, I actually tend to like Peter Schiff a lot. I don't agree with everything he has to say, but I like Peter Schiff a lot. I think he's probably one of the most competent economists out there. Now, this is what I'll say about Peter, because the biggest critique that I've had of Peter Schiff is that he's right, okay? But being right doesn't necessarily mean you're gonna make money. And Peter Schiff is I would say very, very strongly against the Keynesian idea of economics. So if anybody doesn't know Keynesian economics, you could probably read, I would recommend this book called The General Theory. I would read that. Anyway, so Peter Schiff, even though if you listen to his podcast, which I would highly recommend, by the way, it is called The Peter Schiff Show. The Peter Schiff Show, you can find it on YouTube. I would highly recommend you listen to it. I listen to it every week. And I like Peter a lot. But Peter Schiff, CEO Euro Pacific Bank, CEO Euro Pacific Capital, his returns are not good, right? I'm not trying to degrade Peter Schiff, but his worldview, he needs to understand the environment we're living in. okay? And over the past decade, Peter Schiff has made no money, generated no alpha, and actually lost money for his investors, because even though he may be right in saying that, you know, the stock market is going to crash, it's going to crater, there's going to be Armageddon, you got to understand the environment that we've been in the past 14 years, which is artificially suppressed rates. Okay, we talk about this all the time. Federal Reserve suppressing rates. The Federal Reserve also expanding their balance sheet. So there's something called trading with the trend, right? And understanding the environment you're in. You don't have to agree with it. I don't agree with any of this central banking stuff. But as a trader and investor, I have to allocate my money in accordance to the environment we're in, based on monetary cycles, based upon fiscal policy and the like. So Peter Schiff, even though he is right as an academic, doesn't mean you're going to make a lot of money, and his funds have underperformed drastically over the past couple of years. I quickly want to point out this building. This is my favorite building in downtown Miami. It is directly across the street from the FTX Arena. Well, I guess we can't call it that anymore. This is the Freedom Tower. It's my favorite building. This is the building where all of the Cuban immigrants first came to Florida. It's an amazing building. I think it has a lot of history. And the building right behind it is the Paramount Tower, which is also one of my favorites. I love the color scheme, how it has the American flag waving in the breeze. And obviously they put that up due to the midterm elections. CM says Schiff has a full Twitter space dedicated to crypto this week. Must be recorded, worth listening. He is in favor of crypto coin backed by gold. Yeah, I actually, CM, I would not be opposed to a cryptocurrency backed by any type of sort of commodity. I think that's a very good idea. Dan Zhang says fundamentally Peter Schiff is always right, but he tends to ignore the market psychology or technical part of the market at the time. Yeah, so spot on, right? So Peter Schiff, and once again, I just want to state one more time, I'm not bashing Peter Schiff. I'm a huge fan of Peter Schiff, and I learned a lot from the guy. I'd actually like to recommend a quick video. So now that it is Friday in the weekend, I'm assuming everybody has a lot of time to relax. You gotta listen to this documentary series. Well, I'm not even sure if you could call it that, but listen to this, I would say, mini documentary series by Peter Schiff. And it is called I Am the 1%. Okay, I'll say it one more time. I Am the 1% by Peter Schiff. And it was put on by Reason TV during all of the Occupy Wall Street protests. And if you watch that 1 hour and 20 minute video, you are going to learn more about central banking, more about the Federal Reserve, more about what caused the financial crisis, and more about the economy than any sort of course that I took in college. And I minored in economics, and I took a lot of economics classes, forensic accounting classes. I learned more in that docu-series than I did, I would say, during the majority of my econ courses in college. It's just a spectacle. You got to check it out. He does these interviews live from Zuccotti Park in Manhattan during the Occupy Wall Street protests, and you guys are going to love it. So here we are at the FTX Arena. I actually think, ironically, there's an event going on. Hey, Sabrina Fair is here. Says Miami is incredible, crackling with energy. I sound like an ad. Good to see you, Sabrina Fair. Kevin Ramsey is here. Welcome. Hey, Jay Trader. What's up, man? Good to see you. Soho says Tom, making over $55,000 makes a person in the top 1% of income earners in the world. That is true. That is very true. Mets fan says you like Carl Icahn better. Well, didn't Carl Icahn come out here and say that he is putting on a big short position, and he thinks that this recent rally that we've had in the S&P is a bear market rally? So we'll talk about that as well. Carl Icahn also made, I think, about $500 million off of a merger arbitrage trade on Twitter. Alexander M says, Tom, any thoughts on the gilt situation and pension crisis in the UK? Yeah, so Alexander M, we talked about this before. I think sort of my thoughts are the same on it. So essentially what happened in that whole big crisis is when the former Prime Minister, Liz Truss, let me move away from this light so you guys could have a better view. Let's go to the front of the FTX Arena. We'll see if the FTX logo is still there. So essentially what happened is the former PM, Liz Truss, came out and announced a massive, massive stimulus bill that was going to turbocharge the economy. Now, here's the problem. In the UK, you guys have about 10% inflation. It's out of control, and this is no time to be proposing a bill, a massive spending bill to turbocharge the economy, right? And the problem is the market reacted in a way where they knew it was going to work, right? So the bill, it was going to work, it was going to turbocharge the economy, but at the end of the day, that was going to pour more gasoline on this inflation fire. So traders around the world wanted nothing to do with the pound sterling. They started to dump the pound sterling. They started to dump a lot of their gilts. So for those of you who don't know, here in the United States, we call, them bonds, right? We call bonds. But in the UK, they are gilts, right? So if we think about the correlation there, gilts and bonds have an inverse correlation with yields. So gilt prices have an inverse correlation with gilt yields. So as traders and investors, and in this case specifically pension funds, started to dump gilts because they were getting margin called, this almost had a perpetual waterfall cycle. You had an uncontrolled sell-off in the gilt market. You had yields spiking. Yields were going parabolic. And then you had, in the currency markets, you had the pound sterling selling off uncontrollably. So what happened, in order to provide stability to the market, the Bank of England actually needed to come in there and start buying gilts. Now, here's the problem with that. Oh, I think it still says FTX Arena right here. I saw on Twitter that they took it down. Weird. Oh, you know what? Maybe it's the top of the arena. So if you fly over the arena, it says FTX. I think they took that down. I think this is the next thing to go. But anyway, so the problem is the Bank of England, if you remember correctly, was sort of taking the Federal Reserve's lead, okay, Fed Chair Jerome Powell's lead, by saying, we are no way, shape, or form going to pivot. We are going to be steadfast. We are going to continue to raise interest rates, and we're not buying any more gilts. Well, the Bank of England was forced to pivot, or else there would have been another financial crisis. So they didn't call it quantitative easing. They just said, we're going to provide stability to the debt market. So the Bank of England actually had to come in there and start buying gilts again. But we sort of did a review on past live streams about how over leveraged these pension funds are, right? So pension funds across the world tend to be very, very underfunded. And since interest rates have been held at artificially suppressed levels for over 14 years now, this has encouraged risk, okay, to meet those obligations. So when you have negative yielding debt, the vast majority of the world's debt is negative yielding, well, it forces these pension fund managers and hedge fund managers to go into the marketplace and search for risk. So they pile derivatives on top of derivatives to generate more yield. They go invest into very risky things like venture capital and private equity to try to juice returns. And then once we have a market shift from QE to quantitative tightening, that's when things can get out of hand, because these specific sophisticated derivative strategies where you trade derivatives on top of gilts only work when yields are low, but they do not work in an environment where rates are rising. So I think the biggest trigger to that massive sell-off was the introduction of that stimulus bill by Liz Truss, but now she is obviously out of the picture and we have a new PM, or Prime Minister. All right, so here's a better view of the FTX Arena here. Said TVs has walked by FTX one last time. Yeah, so I was looking at something on Twitter. I think the top of the arena, the logo is taken down, but It seems to be up here, and I'm not sure what type of event is going on, but who knows. Hey, Blockchain is here. Good to see you, my friend. Welcome. Check it out, says Tom. FTX management should be locked up. Well, I think there should be some jail time if and only if. And again, I haven't really been following this because you guys know my take on altcoins and cryptocurrencies in general, aside from Bitcoin. I think there should be jail time, right, if there was fraud involved, okay? And I don't really want to make a guess publicly on the live stream if there was or not. I think we could all take a guess on that, but I'm just going to let the regulators and the authorities do their work on it, to be honest. But if you were using client deposits to speculate in the market or as collateral for additional loans, then I think that is definitely a topic of conversation that we need to have. But yeah, that's what I'll say. Check it out. It says FTX filed for Chapter 11 bankruptcy. Wall Street Journal says customers face a long road to get their money back. Any thoughts? Yeah, so check it out. In my opinion, and I don't really want to sound like the bearer of bad news, but the customers are not getting their money back. Okay, if you had money on FTX, I would totally write it off as it's gone. You're not getting your money back. So this is the 1000 Museum building. It's one of my favorite buildings in Miami. It's fantastic. And the reason why you're not getting your money back is because if you understand a Chapter 11 proceeding, everybody pretty much gets paid back first, and then it's the individual retail guy. And so let's say if you had $100,000 on FTX, it's probably gone, and you may get some sort of compensation, like pennies on the dollar, maybe 2 or 3 years from now, right? That's how it usually works. But yeah, and there was a lot of people, and I think this has to do with not proper education as it relates to the custody of cryptocurrencies in general. So I think there was a very prominent figure by the name of Dave Portnoy, and he's the founder and CEO of Barstool Sports. Extremely successful guy, extreme success in building Barstool. But he made a tweet, and I think I actually replied to that tweet. And his tweet was, well, what if we had Bitcoin on FTX? Do we lose all our Bitcoin, or can we just take it out, right? And this is the problem when people don't understand that if you leave your cryptocurrency on an exchange, you do not own your private keys, okay? You are trusting the exchange to custody your Bitcoin for you. And the whole point, or the whole value proposition of Bitcoin, is so you can have unconfiscatable money. So if you were gonna buy Bitcoin, or if you do hold Bitcoin right now, in my view, you gotta take it off the exchanges and put it on a hardware wallet where you own your own private keys, okay? If it's on the exchange, if the exchange gets hacked, if the exchange goes under, you lose everything, all right? This happened many times before, and I know that a lot of people are very new to the cryptocurrency space, so they may not know this, right? But we've been through this many times before. One in particular, Mt. Gox, which happened when I was in college. So in my opinion, the whole point of cryptocurrency as it relates to Bitcoin is unconfiscatable wealth. And if you're gonna buy it and leave it on an exchange, well, then you probably shouldn't buy it at all, because you're negating the only one value proposition it has, in my opinion. John Paul says 1000 Museum was designed by the same architect as 520 West 28th building by the High Line. Oh, dude, we're gonna have to go back and check that out when we're in New York. Let me take a screenshot of that. Lemonade, good to see you. Lemonade, good to see you. Blockchain says not your keys, not your crypto. Yeah, absolutely. Agreed. For you, says Gary Gensler has been meeting with FTX CEO, but didn't go after them. Yeah, well, supposedly there's a big conflict of interest there, right? Now, I don't know all the details, so I don't want to, spout it out as fact. But supposedly his mother and father are very, very well connected to government. So I think there may be some nefarious activity going on there, in my opinion. Hey, the Mighty Bull is here. Says greetings to all moderators and friends. The Mighty Bull. I want to say happy Veterans Day to you, my friend. I know that you served our country, and I appreciate you. And thank you for being here. So hopefully you had a good day today. Billy says, don't order a hardware wallet off of Amazon or eBay. I've heard people have been loading software on them before you get them. Yeah, so I think the only hardware wallet that I would recommend is probably like a Ledger Nano S or something like that. Give you guys one more shot of the Paramount building here in Miami. Brad's Brain, good to see you. Welcome. So, obviously the midterm elections are a big, big catalyst in the stock market. So, when I left work today and started the stream, I checked the Wall Street Journal's website. So the Wall Street Journal has a very, very good map of the election where it shows you just how many seats in the Senate and the House each party controls. So let's do a quick recap because this is very, very important as it relates to the financial markets. So as of doing video, okay, the Democrats control about 48 seats in the Senate. The Republicans control about 49 seats as it relates to the House. The Democrats control 199 seats to the Republicans 211. If you want a majority in the House, let's just cross here. Okay, if you want a majority in the House, I think it's a 218 majority. Okay, keep me honest here, everybody. Oh, this is a nice shot too. And for the Senate is a 51 majority, okay? So here's my one complaint. I have a complaint. And I'm very, very confused about this. You guys know I'm not very political. I don't get involved in the politics. I only pay attention around times like a midterm election or a presidential election. But here's why I'm so baffled and confused, because we still don't have all the results in. And election day was on November 8th, and it's November 11th now. So I log on because obviously I go back and forth between New York and Florida. So I'm interested in who's going to be the new governor of New York and who's going to be the new governor of Florida, right? Within hours, I knew the answer. Kathy Hochul. I'm like, okay, good. Kathy Hochul, whatever, great. Okay, I go to Florida. Governor Ron DeSantis wins. I'm like, oh, okay, great. Results are in. How come for some, and I know a lot of people are more, in tune with the politics than I am. How come we still have states that are much, much smaller than New York? I mean, New York is monstrous. Florida is monstrous. How come Arizona still doesn't have the election results yet? I mean, seriously. I mean, that is just a travesty. And I think Nevada still doesn't have all the results yet. So how come a big state like New York, they can give me the answer within hours, but a small state in comparison to New York, like Arizona, can't? I just don't get it. Anyway, I'll digress on that. Cindy Folis' stupidity? Yeah, I mean, why don't they just copy what New York is doing? Latha says Nevada doesn't have the results until Saturday per their laws. Okay, yeah, I didn't know that. Fairways has taken notice at the states that don't count their votes. Well, I mean, and I sort of get, the one reason why I may have not wanted to bring this up because it was going to spark, controversy in the chat. But look, I'm from New York, and it's a Democratic state, and the results are in lickety split. Okay. Marty Lewis says the New York and Florida elections were not close. Yeah, so that's true, Marty Lewis. But and again, guys, excuse my ignorance on this. I don't pay attention to politics. But here's the thing. When I go to the Wall Street Journal website, I'll quickly show you the 1000 Museum again. When I go to Wall Street Journal's website, right, and I hover the mouse over New York, it says 99% of votes are accounted for. And this was 2 days ago. So New York counted over 90% of their votes on day one, and so did Florida. So I don't know if it was the close race, but when I go to Arizona, for example, I think Arizona only has like 80% of the votes counted. Anyway, it's just something that was on my mind. I don't get it. Hey, big task at hand. What's up, man? Good to see you. You know, I really like how they completely redid everything here. So you have a really, really nice dog park. And in the back, you actually have a soccer field too. Everything is super clean, super neat here. Brand new walkways. You have the Metro Mover access right here. Really, really nice. So I can't see this, but I'll show you guys the soccer field. Isn't that nice? So this is a part of the Paramount building, and they have their own soccer field here. Okay, so Pete's military balance will often be counted after Election Day. 10-4. Yeah, and again, I'm not making an opinion on it. I'm actually just genuinely curious, because coming from New York, coming from now Florida, I'm like, we have a huge population base, but it seems like everything is super smooth and fluid. Like, how come a smaller state like Arizona can't count all of their votes, but in New York, like, everything is seamless? Anyway, we'll digress on that. The reason why I bring it up, by the way, I'll quickly show you guys the entrance here from this perspective. So the construction is almost complete. So you have all brand new walkways, Metro Mover station. This is going to be 2 soccer fields and other dog park. And then when we walk to the front of the Paramount building, is actually a lot nicer. I'll show you guys. Hey, Bree Johnson is here. It says, hey Tom, I'm in Phoenix, Arizona. And they're saying they won't have it counted until early next week. It's because so many early ballots, the ones that we could drop off in the mail. Okay, got it. See, so maybe they didn't arrive all at the same time. Got it. All right, yeah, it's just a genuine question. I'm not making a statement either way. But so the reason why I bring that up is because as we talked about, right? And I think we're going to do another stream analyzing all this data. The reason why I bring it up, and once again, I'll give him credit, I'll give him a shout out. This comes from Fundstrat. So Thomas Lee's equity research firm based out in New York. And one of the things that I'm looking for is what it's called the dream scenario for the stock market. Not to be confused with the political environment I necessarily want, but based upon historical trends of previous midterm election results, the following statement is the most preferred scenario for equity returns after the midterms. Okay, and that's as follows. That is when you have a Democrat as the president, so we have President Joe Biden, while you have the Senate majority being Republican. So again, you have to have 51 majority for the Senate, okay? And right now it is 48 to the Democrats, 59 to the Republicans. 49 to the Republicans. So the Republicans would need to win 2 more Senate seats to have the majority, okay? Now, when we flip over to the House, it's 216 for the House majority. If the Republicans can take both the House and the Senate on a historical basis, based upon the fact that we have a Democrat as the president, President Joe Biden, that is the all-time, I would say, most accommodative scenario for the market, for the best equity market returns 36 months after midterms, okay? So that is why I'm so eager to get all the results in. Again, I'm not putting my political bias on anybody. I'm not saying I want a Democrat or a Republican to win. I could care less. What the point is, I'm perplexed as to why all the results are in, because I wanted to do a live stream sort of analyzing the different scenarios to say, look, what I want to do is break it down to say 36 months after the election. Let's say if it's a mixed. Let's say if the Democrats have the Senate and the Republicans have the House, based on historical metrics, where does the market go 36 months from now? So that is sort of what I want. And I can't really do that and analyze that data unless we have all the election results in. But according to you guys, it seems like we should have that relatively soon, hopefully by next week. But once again, the most preferred scenario as it relates to the stock market is if we have Republicans controlling the House and the Senate and Democrat as the president. So here we are outside the Paramount building. Really, really unique building. It's interesting to see it this close up, how you can kind of see the color scheme and how everything changes color. Now, I believe this particular building right here has the most amenities in the entire North America. So if you're looking to either buy a place or rent a place with top class amenities like swimming pools, gyms, soccer fields, tennis courts, you name it, I believe this building right here, the Paramount World Center, has the most amenities of any building in North America. Hey, Lobster is here. Says, watch out. Good to see you. LT Prod, welcome, welcome. Marty Lewis says, I don't believe in historical metrics, considering that this midterm election did not follow historical metrics. Interesting. I respect it. Pineapple Water says, even if the quote-unquote best scenario for the market happens and a huge rally, everyone will then remember the tiny issue called inflation, says Pineapple Water. Yeah, so I think I'm mostly interested in it just as a guide and as a gauge in some direction. Because when we're building an investment thesis, right, the first thing we need to do is take sort of a top-down approach. So if you're trying to construct and build portfolios, you can't build a portfolio unless you know the environment in which you're operating in. Okay, and that comes down to a couple things. Well, the number one thing that I look for is GDP, right? So if I'm building or constructing a portfolio, I want to ask myself, where is the market? Where does the market come from, right? So are we coming out of a bear market? Are we coming out of a bull market? Where is the market right now is number two, right? So are we in a bull market? Are we in a bear market? Or are we in a sideways market? And number three is, where do we think the market is going? And how could we forecast that based upon a couple leading indicators, right? So there's a pretty high correlation between GDP growth and the growth of the price appreciation in the S&P 500. And that's why we always review on the stream different leading indicators like the Institute for Supply Management PMI numbers, right? So the PMIs is a forecasting mechanism of the health of the overall manufacturing sector in the United States, which makes up, I think, about 20% of economic activity. That's why we look at the service sector PMIs. So we need to understand the environment we're living in. And I think a lot of capital allocators right now on Wall Street, the biggest environment that they need to solve for is the political environment, okay? Because if we have the Democrats sweep everything, well, then maybe there's different rules and regulations that are going to go into place, and capital allocators need to allocate their capital in accordance to that specific environment, right? So I think that's why I'm most interested in it. Jay Victor is here. What's up, Jay Victor? Good to see you. This is a beautiful night. Thank you for being here. Dan Zhang says, Tom, I feel like so many people were waiting for the S&P 500 to hit 4,000, and today it finally happened. Yeah, so I mean, what does Jesse Livermore
or what did Jesse Livermore say about big round numbers, right? Now, here's something interesting. So Dan brings up a good point, and I think it's important to just quickly review this once again. And I wrote down a couple key levels for everybody, so we will review that. Hey, Matt, what's up? I see Matt is here. Good to see you. Nicholas says, hey, Tom, what is your reaction to GTA 6 being based in Miami, Florida? GTA 6, I don't know what that is. What is GTA 6? Mike C says, I've almost hit break even for the year again. Yeah, so let's review something really, really quick. And I think it's very important. So let's take a step back and look where the S&P closed today. This is the Metro Mover station, by the way. This is Metro Mover Park West station right here. So the S&P 500 closed up about 36 points today to 3,992. So pretty much at that round even number of 4,000, right? I think we could cross. I think we're good. Now, however, I would like everybody to do the following if you have the means to do this. I would open up a tradingview.com account. It's completely free, and it's just a free charting software service. I don't even think you need to open up an account. I just think you just need to go to the website. And if you type in ticker symbol SPX, that is going to give you the chart of the S&P 500. I want you to throw a 200-day moving average onto that chart. I'll tell you why. We have now broken back above the 50-day on the S&P. However, look at the trajectory of the 200-day. It's almost at like a 5 o'clock, 6 o'clock headed straight down. So if we think about the exact level where the 200-day is right now, it's at 4,080, so 4080 on the S&P. And the reason why that is so important, I think the guy is here with the helicopter on his yacht. Yeah, I think that's him. We'll go and check him out. The reason why that's so important is because let's look back throughout history. If we could cross the street here. Let's look back throughout history at the most recent bear market rally. And if you look back throughout history, the most recent bear market rally started on the following date. It started on June 17th, 2022. The S&P put in a bottom at 3640. That rally lasted pretty much the entire summer and ended on August 22nd when the S&P 500 hit 4322. Now, notice something interesting here. 4322 is a level on the indice that matches where the 200-day moving average declined price. So I'm not saying that the S&P 500 is going to rally right into the 200-day and be rejected and then we make a lower low, but it's just something, a level where we need to be cognizant of because we're probably going to have some sort of a big reaction at the 200-day. A lot of these algos are programmed to have reactions around major moving averages. So the summer rally was about 18%, and this rally so far was about 500 points from the bottom. Okay, I think like to the tick, like exactly 500 point rally, which equates to about 14%. So we're right up against the historical bear market rally level. So I think we need to be a little bit cautious here. But again, thinking about, CAN SLIM metrics, we had 2 consecutive follow-through days. The follow-through day is held. I've increased my exposure a little bit, but here's the crazy thing. My exposure, because I had to buy something, and again, when I very seldom talk about what I buy specifically, just because I don't like people saying, oh, you told me to buy this. We're just talking amongst ourselves here as a conversation. I'm long the XLE, right? And it's been performing well, but usually when you have a major market bottom and a market change, you have freaking thunder coming off the bottom. And it's almost like you have so many choices of things to buy that are breaking out of bases, that are just taking off. And we just have a lack of leadership in the market. It's just been energy, right? You look at tech, it's been creamed, it's been crushed. So I think the thinness of the market is getting me a little bit concerned, but I'm long the XLE. What can you do? Sam Oliver says S&P needs more volume. What do you think? Yeah, I mean, we had decent volume. We had pretty decent volume yesterday. Today was a little light. But I think the biggest thing is earnings at the end of the day and GDP. And the good news is we actually got a positive GDP print a couple weeks ago. So that's positive news. And earnings have been meh. Earnings have been meh. And I think in this environment, here, I'll give you guys one quick shot of the beautiful Freedom Tower. I think in this environment, Wall Street earnings estimates for next year are still a little bit too high. If I had to give a personal opinion, I think the earnings estimates for next year on Wall Street are still a little bit too high, in my opinion. James Tiger says, I read NASDAQ 100 climbed 9.4%. The best two-day gain since 2008. Bottom hit in 2009. If true, see what happens. Yeah, I mean, markets were rallying very, very, very hard. And I think it was a couple things, right? I think everybody tries to say, oh, the market rallied, there has to be a reason. Well, I don't think there was necessarily a reason. Some people will say, oh, it was the inflation print that was less than economists projected. But if you think about the carnage that we were just coming off of, almost every single stock on the exchange I would say excluding the energy stocks, oil and gas stocks, were all so egregiously extended to the downside from their 50-day and 200-day moving averages that any type of catalyst in the market is going to cause some sort of a big short squeeze. But look, it is progress. It's progress nonetheless, and we have to stick to the rules. So I'm not sure if this is the same yacht. I thought it was, but now I'm looking at it up close, it's actually a different one. So the one that's usually parked here in the winter, I forget the exact name, maybe somebody in the chat could help me out, but it usually has a big helicopter on the top. But this one still looks kind of cool. It's a pretty cool shot with the bird here as well. Hey, Joseph Hardaway is here. Good to see you, Joseph. Charlie Richardson, my friend, is here. Good to see you, Charlie. Happy Friday, my friend. Thanks for being here. Pineapple Water, good to see you. Hey, Cindy Foley says, good night, Tom, and all. It's movie night tonight. Please be safe. Thank you so much. Have a great night and have a good weekend, by the way. So these birds are amazing. Sometimes you'll see them dive into the water and pick up fish. And the reason why they hang out here, man, those things look amazing. The reasons why they hang out here is because these big boats, as they put their lights in the water, look at all the fish swimming around the lights. You see, there's tons and tons of fish swimming around these lights. M. Wise says, is that a pelican? I'm not too sure what it was called. Maybe an egret or something like that. Let's see if we see anything monsters here. All right, you guys got to be on the outlook. If you guys are enjoying tonight's live stream, feel free to leave a like on the video and hit the subscribe button if you're new. We do these live streams about 5 days a week between New York City and Miami, and we'd love for you guys to join our stream, so please hit the subscribe button. Oh, look at all the fish here. That's crazy. Let me know if you guys can see that on the stream. Maybe it's too hard to make out on the stream, but there's tons of fish swimming all around here. I'm just not sure the camera is good enough so you guys can see it. Hey, Tiago Pereira is here. Good to see you. You see him? Right here. Hey, War Walker. What's up, man? Good to see you. Hey, Alexander M says, I'm off to sleep now. It's 3 a.m. here in the UK. Thank you, Tom, and have a good night. Hey, have a good night too, and have a great weekend. Thank you for joining. Welcome to all of our friends in the UK. Oh, guys, check these guys out. Look at this school of fish right here. You see them? All right here, you can see them. I wish there was something bigger. You know, usually as it gets later into the winter, there's dolphins swimming all around the FTX Arena. Yeah, Ed T says looks like mostly bait fish, right? Hey Sam, what's up, man? Good to see you. Trinity says, what kind of fish? I guess they're called bait fish. I'll give you one more look at them and then we'll continue on our walk. We also have to cover, guys, big piece of news came out today, Friday, Veterans Day. The University of Michigan Consumer Sentiment Index cratered today, which is not good news. Oh, the guy landed here. Maybe he's going to eat some of the fish. But the University of Michigan Consumer Sentiment Index declined month over month. Definitely not good. So consumer sentiment is nearing an all-time low, even though we're having some slight deceleration in inflation. But you know what was interesting? I was looking through the report, the University of Michigan Consumer Sentiment Report, posted about a 54.7 reading. That was down 8.7% month over month. But check this out. And I think this is something we've actually already predicted on the channel many, many months ago. It said spending sentiment in durable goods, mostly appliances, TVs, and cars, declined the most. I think this guy's waiting to jump in and eat something. That would be amazing if we got that on stream. But what did we just get out? What big news that we just got out on Thursday? It was the CPI report. And if you noticed, in the CPI, used car prices actually declined month over month. So it seems as if inventory is building here and higher interest rates are putting a lot of pressure on consumers to essentially hold up on bigger purchases, if that makes sense. So I want to ask you guys, due to the current economic environment, do you see yourself holding up or pausing any major spending that you may have planned for 2023 or even around the holidays? Or do you think things are unchanged? And I think it'd be interesting to see what everybody in the chat thinks, because let's see if we are with consensus in the University of Michigan University of Michigan Consumer Sentiment Index. So this yacht is called the Norwegian Queen. Interesting. Matt says absolutely the LT Prods is better quality cars at the car auction this week than most of the year. Now repossessions are actually ticking up too, which is definitely concerning. Abdullah says absolutely. Ben Robinson says wedding planning is eating into my 2023 spending. Oof. Yeah, weddings can be expensive. I actually just went to a wedding and boy, are they crazy expensive. Crazy, crazy expensive. I think for me, just to attend the wedding I think I spent like $1,000 just from all the stuff. You know, the travel, the hotel room, renting the tuxedo, all this stuff. I think it cost over $1,000. So RIP to all those people out there that have a lot of friends. Hopefully, I mean, thank God I don't have too many friends. Just kidding, it was a joke. But all right, take a look at the yacht from this angle. This thing looks pretty amazing. Travel Niece says, I'm simply taking a different route. Inflation made me move back home. Too expensive here. I mean, there's nothing wrong with that, right? There's nothing wrong with that. I don't think that's something you should be ashamed of. If you have the means to live at home for as long as possible, especially in this economic environment, I would do it, just as long as you're not a freeloader, right? If you can come to terms with your parents and say, look, I'm gonna go to work every day, I'm gonna save and invest my money, so one day I can maybe buy an investment property, or add to my retirement accounts. I see no problem with that. I actually think that's an extremely smart idea. Dusty Cole says, Tom, weddings are insane. Yeah, weddings are insanely expensive. Michael Joseph is only buying crypto in 2023. So, Michael, there was an interesting tweet that hedge fund manager Dan Tapiero put out. And if you guys want to see it, if you guys have Twitter, I'm very active on Twitter. You can connect with me on Twitter at Walks Wall Street. And Dan Tapiero, I respect this guy very, very much because, oh, look at all the bait fish here. There's like hundreds of them all around here. So Dan Tapiero actually got his start on Wall Street by working under one of the greatest to ever do it by far. And that man is Stanley Druckenmiller, who we talk about a lot on the live stream. So Dan Tapiero made a comment about all of the crazy debacles, I'd say, that's going on in the cryptocurrency world as it relates to the blow up of Three Arrows Capital, Voyager, Celsius, Terra Luna, and most recently, the blow up of FTX. And what Dan Tapiero said is, he said, usually markets tend to bottom around the most bearish sentiment you could ever imagine. And number two, when there's big liquidations and blowups. And this has happened many, many times before. And what I'd like to say is the sentiment couldn't be more bearish in the cryptocurrency and Bitcoin environment right now, for good reason. But I think a lot of people, especially those that are new to the space, they think that FTX is Bitcoin. They think that Three Arrows Capital is Bitcoin. They have nothing to do with each other, right? These are hedge funds and these are exchanges. Exchanges blow up all the time, especially exchanges that have, you know, they print their own currency out of thin air, like the FTX token and like Binance, BNB. So when these type of, I would say, liquidity events happen, specifically as it relates to exchanges blowing up, there's usually a ton of other counterparty risk there. And it's sort of like a contagion effect, right? So you have this cascading, it could either be margin calls, it could be a ton of stuff, and it forces liquidation of assets. So I think that's exactly what we saw in the movement of Bitcoin, specifically over the past couple of days when we had that big flush. You know, this is how markets bottom. So if you want to see that tweet, definitely follow him as well on Twitter at Dan Tapiero. But I think it was like the last thing that I retweeted on my Twitter. So definitely check that out. Hey, Abdullah's here, Austin City Limits. Michael Joseph says, the question is if the crypto age, ice age, will start to affect the other markets. That's a good question, and I don't think so, because I think people still overestimate in a way how big the entire cryptocurrency ecosystem is. It's almost like nothing. I mean, if you compare the entire market cap of the S&P 500 to the entire market cap of all cryptocurrencies, if you go to coinmarketcap.com, you'll actually be able to see the entire market cap of all crypto assets. And it's like a fraction of the entire US equity market. It's almost like nothing. Dan Zhang says, Tom, Bloomberg released an article with an interesting title called Is FTX the Crypto's World, Lehman Brothers, or Enron? Any thoughts? Well, I think it may be worse than Enron, actually, right? I mean, just the size and the scale. I think, you know, allegedly there's probably going to be a lot of accounting fraud that comes out of the woodwork. Now, there was some rumors, Dan, that said that the auditing of FTX was done by a Big Four accountant. I don't think that's true. I think news actually came out that the third-party auditor was quote unquote the first some nonsense. It was like the first accounting firm in the metaverse. All this, some nonsense. But yeah, I mean, the size and scope. If this really turns out that Sam did this nefarious activity, cooked the books, and was speculating with his clients' deposits, then yeah, this is probably bigger than Enron. I don't know. What do you think? Do you think this is going to be bigger than Enron? The LT prods, so FTX could not be as bad as Lehman Brothers, but worse than Enron? What do you mean? So Dan Zhang says it is audited by a Big Four firm. Oh, if it is, got it. Yeah, I don't think it was. I think that was just a rumor. All right, team, let's head to Brickell now. But I think it's going to be too far of a walk. So let's just jump on the Metro Mover, and that should take us to Brickell. So we will get on over here. I never really walked down this way. I just wanted to show you guys the FTX Arena. Michael Joseph says, Tom, this is going to be in the middle. Not as bad as Lehman Brothers, but worse than Enron. Victor G says Alameda. Yeah, I think Alameda was the subsidiary hedge fund. Mike C says it wasn't that long ago before BTC was below 5,000. Hey, Gregory says the FTX Arena. I know, man. All right, so since we're outside of the FTX Arena, any wagers in the chat? I think this is going to be funny. Any wagers to see who's going to be the new sponsor? If you had to take a guess, who do you think is going to be the new sponsor of the now FTX Arena? It might as well be a big oil company, something like that. FTX Arena. All right, if I had to take a gander at it, they'll probably structure a deal with one of the airlines again. Ooh, Harry Connors to Citadel. Yeah, that would be good. I mean, Citadel Securities did move to Miami. I think that would actually be really good if they could do that. You know, Ken Griffin may very well do that, actually. I think Ken Griffin very, very well may do that. Yeah, Mike C is like the Behind the Street newsletter will be a sponsor. Huh. It's hilarious. It's kind of like a bad omen now, right? Okay, guys, hear me out. Isn't that technically like a bad omen? Like if I owned a big business, right? If I had the money to sponsor the FTX Arena, I don't know if I would want to after this. I'd feel like I'm entering some sort of like a bad luck or a bad omen. Rob K says Walks in Wall Street Arena. If they offer it to me, I'll do it. But yeah, no way. John K says Citadel Arena sounds good. It does sound good. Citadel Securities Arena. The LT Prod says Twitter Arena. Yeah, maybe. Hey, Line saying, good to see you. Yeah, we are going to jump on the Metro Mover, guys, because we got to go to Brickell tonight. I got to show you guys Brickell. But we covered a lot. We covered a lot so far tonight on the stream. The other thing I wanted to just quickly mention, I think I mentioned this at the beginning, there was an updated article that came out in the Wall Street Journal talking about financing drying up on Wall Street. And I wanted to talk about this for a couple reasons, because as interest rates go up, right? So we are in an environment where interest rates are steadily rising. Now, think about the environment we just came off of, about 14 years of ZIRP, ZIRP, zero interest rate policy. And during that time, US corporations have accumulated some $10 trillion in debt, mostly over the past decade, right, as the Federal Reserve was holding rates extremely, extremely low. So North American companies, according to the Wall Street Journal, will now have to come up with about $200 billion over the remainder of 2022 and 2023 to cover rising interest rate expenses as it relates to all the debt that they took on. So here's the reason why I wanted to bring this up. And this goes back to something that we've been talking about pretty much ever since I started the channel. I'm not sure if I should get on this one or not. No, this goes this way. We got to go that way. Yeah, so we're going to get on this one. And then we're going to transfer to the government center.
Passengers, for your safety, stand back from the platform edge. When the train arrives, allow passengers to exit before attempting to board.
So the problem is, we talked about something called zombie companies. Does anybody remember we would do these live streams, we would talk about zombie companies? So zombie companies are quite simply, mainly in like the Russell 2000 area, I would say, but specifically companies that are only able to exist due to low interest rates. So they can continuously acquire debt very, very cheaply to pay off their existing debt and fund their operations, right? So you think about a lot of these over-leveraged software companies, a lot of the Russell 2000 stocks, a lot of zombie companies out there. And the problem is, as rates go up and we no longer live in an environment where money is cheap or debt is cheap, well, I think a lot of these companies could potentially go under. So I wish I could have linked the link to the Wall Street Journal article. I forgot to do that. I do apologize, but I will be writing about it a little bit. So on Sunday night, I'm going to be sending out the Behind the Street newsletter. So if you scan the QR code on your screen, punch in your email, you will sign up to receive the free investing newsletter where we write about not only the US equity market, emerging markets, and fixed income. But I think this is a very, very important trend we need to be paying attention to, because I'm not sure how a lot of these companies are going to be able to service their debt, especially if business starts to decline should the United States enter a recession. So scan the QR code, punch in your email. We're about to get on the Metro Mover, and I will see you guys on the other side. We're going to transfer at the government center. So I'll see you there. I think we have to transfer at the government center anyway. I remember that before from Zozo Bob. Dr. Long, it's good to see you.
Park West Station. Please stand clear of the door.
Yeah, I think we get off at Government Center.
This train will depart momentarily.
We just missed the train.
Please stand clear of the door.
Yeah.
Departure of the train is being delayed. The next stop is College North Station. Transfer here for Inner Loop.
So you can see the Bayside Marketplace in the distance. You can see the Ferris wheel too. Yes, Sparks Carnival, that was the Ferris wheel. So that is the Ferris wheel at Bayside Marketplace.
Please hold on. The train is approaching.
The LT Prod, I would consider a lot of the SPACs. I would consider a lot of the SPACs that. Alright, 2 more stops. So if you look all the way in the distance, you could actually see the Miami Bowl.
College North Station. Transfer here for Inner Loop. The next stop is Wilkie D. Ferguson Jr. Station. Exit here for Pipeline.
This is where you get the bright line. So I think we have 2 more stops. Okay, this is the one we're getting off at. Alright, we gotta get off here and then wait for the Brickell loop, and then we're good. Alright, so this is Government Center. And now we gotta wait for Brickell, which is in 4 minutes. Alright, so this is where we came from. So the other stop is where you can get the bright line. So we gotta wait for 2 more trains. Line Sync says, Tom, how many passengers per carriage maximum? You know, I'm not sure. I actually don't know. Now, I've actually never seen this before. So these are 2 Metromover trains connected. Never seen that. Usually it's only one. FredX, I saw that too, man. Mimi says, Tom, this station reminds me of Boston. Mike C says, how would they enforce a carriage maximum with an unmanned train? I don't know, maybe there's a weight limit. Maybe the train refuses to move with the weight limit. Who knows? I would say the government center is probably one of the most outdated Metromover stations that I've been to. Any of the Miami people in the chat, would you say so? Because all the other Metromover stations seem to be pretty up to date and pretty brand new. DJ Blackjack says they scraped the Metro Rail train to South Beach. Did they really? And now they want to extend the Metro Rail to South Beach instead. I thought they just announced that the Metromover is going to go to South Beach, and then they scrapped the plans. Interesting, I didn't know that. Michael Joseph says Japan has the best trains. They do. What are those? The Japanese bullet trains, I think. Now, there is a theory, supposedly the reason why the United States doesn't have like super fast and efficient rail is because a lot of the lobbying of the oil companies, they want everybody to drive. I think with the amount of money that the United States has, well, I guess we don't have a lot of money. We're broke as a country, but all of the crazy spending, our crazy military and defense budget, we should build high-speed rail across the country. I think that would be probably a better use of the time. Okay, DJ Blackjack says, sorry, the Metromover will be extended to South Beach. Yeah, that's what I thought too. All right, we got to get on the train.
Platform of platform edge. Allow passengers to exit the vehicle before boarding.
Yeah, this is it. Brickell Loop. Steph UH is agree. Yeah, I mean, imagine if there was a train that goes like 300 miles an hour cross country. Does anybody know, out of curiosity, how fast the trains are in Japan? I think like 200 miles an hour, maybe. Maybe more. I think this is the right one. Yeah, Brickell Loop. There we go. Depends on the train. What are they called? The bullet trains, I think, though, right? Michael Joseph says, Tom, it has been proposed for 20 years, but Congress never wants to do it. Yeah, that sounds about right. Very efficient capital allocators. Our government is.
The next stop is 3rd Street Station.
Yeah, I'm very impressed with a lot of the infrastructure in places like Korea and Japan. It just seems like it's so much more efficient than in the United States. Japan and also Korea, specifically in Seoul, has a very, very efficient public transportation system. right now you could see Brickell City Center from here.
This is 3rd Street Station. The next stop is Riverwalk Station.
Ben Robinson says Tom, Asia has wonderful public transportation infrastructure due to lack of motor vehicle ownership. That's a good point. Also, it's a lot newer infrastructure, right? The United States is very, very old infrastructure, especially as it relates to like telecom infrastructure. All right, so now we are going over. Yeah, DJ Blackjack says, did you hear about the Bentley residences? I did. Once that is built, hopefully I can give you guys a tour of in the building. All right, so this is Riverwalk, and you see all the way in the distance Brickell City Center. So that's where we're going. So I think 2 more stops.
Riverwalk Station. Please stand clear of the doors and hold the handrails. This train will depart momentarily. The next stop is
They do keep the train stations really, really clean here, though, I noticed. I've never seen garbage on the floor of the Metromover stations.
Please hold on. The train is approaching. Brickell City Center Station, 8th Street.
We'll get off at this one because there's a better view here. Oh, this is 5th Street. We could walk over. We got far enough. But I wanted to show you guys the view from up here. It's insane. So if you look across the river there, that's actually where we do a lot of the walking streams. And supposedly this is going to be some big construction site, big construction area. And then as we go over here, this is Brickell City Center, the WeWork building where I work out of sometimes, and then the 2 SLS Lux Towers. So let us head downstairs. Oh, speaking of the, this is the Metro Rail, right? There it goes, right here. Oh, this is cool too. You can see the tallest residential apartment building in Miami. This is the Panorama Tower. Wow, look at how high up this train station is. Jeez. All right, let's head down. Hey, Marty Lewis says, I know we don't talk politics, but the AZ Senate race has been determined. Who won? No, please, it's definitely on topic with the channel because that's actually the topic we were talking about tonight. The best setup for the stock market. So who won Arizona? I've been refreshing the page all day. Does anybody know if you want to put it in the chat? So we came all the way from over there. That's the Paramount building. Mark Kelly won Arizona. Oh, the Senate race. Oh, sorry. I thought you said governor. So Mark Kelly is who? Is that the Democrat or the Republican? I'm assuming the Democrat, right? Bitzita Lopez, good to see you. I mean, Marty Lewis, it took long enough, right? I mean, man, that's a long time. New York, we had the election results the same day. And Florida, the election results were the same day, too. Marty Lewis is the Democrat? Okay. So according to that results, if we look back at the notes here, that means the Democrats, it's now tied 49-49 in the Senate. So you need a 51 majority. So we'll see. It's going to be close. Going to be close. All right, let's cross here. Bree says we don't have a governor yet. Not yet. I wonder how they could call the Senate. I don't know. I don't know how it works. LT Prods is Mark Kelly, 51. Blake Masters. Oh, Blake Masters was the Republican candidate at 49. So one thing I wanted to quickly mention now that we're approaching the end of the year, and this is very, very important because it's going to affect share buybacks or stock buybacks, share repurchase programs. Now, with the inflation, I think there was in addition to the Inflation Reduction Act, that there will now be a 1% excise tax on all share buybacks, share repurchase programs. And that should raise a significant amount of tax revenue. Now, the point, if I agree with it or not, is not sort of the point here, but I think the controversy has been this, and I actually called this. I said one of the ways, right, there's two main ways that companies can return value to shareholders. And the first way is through traditional dividend payments, right? So let's say, for example, if you own shares of Apple, right? Now, Apple pays a quarterly dividend in the form of a cash dividend. Now, the problem with that, I don't really want to say problem, but the issue with that, as of late, many shareholders prefer share buybacks to dividends because dividends are a taxable event, right? So let's say if you own Apple in your brokerage account and you reinvest the dividends, or you own ExxonMobil and you reinvest the dividends, even though you don't sell the stock, let's just assume it's in a taxable brokerage account and not an IRA or a 401k, you still have to pay the taxes on the dividends, right? However, let's say if Apple takes $1 billion in cash on their balance sheet and decides to return value to shareholders by buying back the stock, that's another way it can return value to shareholders because it is not a taxable event. Okay, if you're buying stock and holding it, the way that returns value to shareholders is it reduces the overall float of shares on the market. So it reduces the amount of shares outstanding, thus increases the earnings per share. Okay, and there's a direct correlation between EPS growth, so the acronym is EPS, earnings per share, and stock price appreciation. So if you buy back your own stock, you reduce the amount of shares outstanding, it's not a taxable event, and you increase your EPS or earnings per share. And over the last, I would say, decade, share buybacks have been an even more favorable way that board of directors really encourage companies to return value to shareholders, because a dividend payment, you got to pay taxes on it, right? Now, if you get paid dividend payments, let's say if you own an index fund in a retirement account where it's tax deferred, you're not going to pay the taxes on that. Your wealth is going to grow tax-free, but you do have to pay taxes once you start to take out the money if it's in a traditional IRA, right? So this example is if you're in a traditional brokerage account, a taxable brokerage account, dividends are taxed. Share buybacks is a way to return value to shareholders, skating the taxes. So the government has caught on here, and I called this and I said the government is going to put in some sort of rule, regulation, or law, either to ban share buybacks, which would never happen because there's too much lobbying, or number two, they're going to tax it. So the theory on Wall Street is this: companies are going to change up their strategy and maybe not buy back as much stock to avoid the tax. That has been consensus on the street, but in the grand scheme of things, if you think about the companies who buy back the vast majority of their stock, or the companies that make up the most of the share buyback programs, I think these companies are so large that it's not really going to make a difference. In my opinion, I don't think it'll matter. I don't think that Apple is going to materially change their buyback structure to avoid the 1% excise tax. However, I will say there's an interesting correlation that just happened in Q3 going into Q4, where we had record amount of share buybacks. And that's probably because a lot of these companies are trying to get in their share buybacks before they're taxed. So any share buyback after December 31st, okay, so any share repurchase program after December 31st will be subject to that particular 1% excise tax. So I think it's something we need to pay attention to. Hey, Destructionist is here. What's up? Good to see you, Destructionist. Welcome, welcome. Always a pleasure. You know, let's go street level tonight. Hey, Gene is here. Hello, Tom. What a beautiful mall you're in. What is your favorite shop in Miami and New York City? I don't know. I don't think I have a particular favorite shop. I don't know. I think Brickell City Center in general is really nice. It's always very clean. Everything is very modern. Looks like they're putting the Christmas stuff up. Okay, so now we are headed to Mary Brickell Village. But if you guys are enjoying the live stream so far, feel free to leave a like on the video and hit the subscribe button if you are new. We do these live streams about 5 days a week between New York City and Miami, and we would love to have you along for the ride. So speaking of a SPAC, this is Lucid Motors, which went public via SPAC, or Special Purpose Acquisition Company. Steph U up says, do you have a favorite city between New York City and Miami? I don't know. I don't think so. I haven't really traveled enough places maybe to have a favorite city outside of New York or Miami. If I had to throw a name out there, I would say London, but I've never been to London. But supposedly, I've been told if you're big into finance, you would really, really like London. So I don't know, maybe I'll make my way over there soon. The LT Pros is Lucid is ramping up production. You know, it's interesting news we're getting out of China. Did anybody see the reports coming out of NIO, which is one of the Chinese EV companies? Now, that is my concern for Tesla in China and other emerging markets, because there's so many different options. And the reason why I say that, just to give a little bit of an analogy, does anybody remember us talking about the company Luckin Coffee? Does anybody remember that? 19, a Chinese coffee shop that goes by the name of Luckin Coffee. They actually went public in the New York markets, right, in the United States, as a Chinese ADR. I think it was a Chinese ADR. And for those of you who don't know what that means, it means American Depository Receipt. Now, Luckin Coffee is an actual real business over the counter now. So the American ADR trades over the counter. But they were delisted because they were cooking the books to the tune of about $350 million. And it's so funny because investments, which is actually based in New York City. I think Ziff Brothers office, but manager that used to work at Ziff Brothers now runs his own firm, and he acquired a minority stake. But here's the question. Can we trust reporting and the accounting coming out of Chinese companies with this exact problem? Layla says we're buffering. Yeah, there's a lot of people. But okay, let's see if we're buffering now. I think we should be good now. Already bumping up